Good morning, everybody, and welcome to Taco Tuesday, October the 15th. VIX expiration is tomorrow. We have Bank of America, Goldman Sachs, and Citigroup reporting today, as well as United Health. And we are still in OPEX week, so I am warning you in advance that this video will be a slightly bit longer than yesterday's and typical updates because we're asking for help. And when I'm saying that we're asking for help, it's when things start to break down with no specific reason or catalyst, and you're trying to figure things out. I share you here a tweet from Sven Hendrich. Amazing long-term portfolio asset manager. Amazing human individual. He tweets out yesterday, this is wild. We're witnessing a total breakdown in asset class correlations. The dollar is ripping, yields are ripping, and the SPX is ripping. These are things that have never, ever been witnessed. And yet here we are. Quick update here that yes, we have United Health, Bank of America, Johnson & Johnson, Goldman Sachs, Citigroup all reporting before the opening bell. Nobody of any interest reporting after the closing bell because this is the pause week, if you want to call it, because there's no one specific really reporting that's of any large value other than themselves. And later today we have Fed's Daily speaking, the 6-month and 3-month auction, and the New York Fed inflation expectations coming in at 1 o'clock, which some people have said is the most reliable. It doesn't really matter. And then tomorrow morning we have mortgage applications, the mortgage rates, Morgan Stanley, U.S. import prices, and nothing for the rest of the day tomorrow. So I start you off where I believe is the best place to start off, and that is the beginning of this week. This week having started at 58.2981 on the SPX, up a little bit close to 15 points from Friday's close, never even considering filling the gap. 15 or 14.78 point gap up, a 30 points above the close, 45 points above the previous close. And if you notice here, as we are tracking over these last, call it 6 trading sessions, the volatility is there, but it just is not there intraday because we're just getting that single angle right on up to one edge, and that's the upside edge. On to Tuesday, being today Tuesday, they haven't been fantastic, not like they used to be, but we have had some volatility on some of these Tuesdays. Not to say that we will get it again today, but as I shared long and multiple times before, after that April 30th sell down, we went 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 Taco Tuesdays with zero volatility whatsoever. All green closes. A little bit of a mixed match as of recent, but still nothing to use what we used to use back in the day to solidify our Taco Tuesday trades. On the QQQ, the upside gap is completely filled. There are 0 upside gaps to be filled. Very small range day, less than 4 points. Did fill the upside gap, did get the plus 1%. And very similar to how I was tracking it back here in July when we were closing plus 20% year to date. Those were all quite significant in a row, and here we are doing this very similar fashion as of the moment. So short term, nothing to go out there and start pounding the table and screaming about. I need to fix this because I moved something earlier, so bear with me. So that makes sure I know that it was a green week on the IWM. plus 2 points. IWM, nothing, no plus 1%, no minus 1%, up here in the pretty solid, unbreakable zone of that 224, 225 up above. On your Russell 2000, that 2050, which you saw. So again, there's nothing that's showing within just the data alone that there's something to go and jump on. So I bring you on to the VIX. I'll start here. VIX expiration is tomorrow morning. All of the open interest is on the puts. And what was really odd was they started putting that open interest, the 21s and the 20s, in the money, where your big open interest is down here at 18 and 16. And the way the VIX has been trading, I'm not so sure that they're going to be able to avoid that 19 going in the money. But it's holding off. It's holding off for now. And again, we're just 2 days from the actual full moon being on Wednesday. So that being what it is, and just to point that out, again, the full moon is Wednesday, October 17th. So we are looking for a market top to be coming in here very shortly. So here, I'm going to just zoom out a bit, and what I'm sharing you here is election years. And these are going back to the date of birth for me, 1972. Over here in 1972, when Nixon was reelected, here we are peaking right around the middle of August, selling down into the middle of October, and then having the rally up into what I believe was Watergate. Watergate occurred somewhere in this area. And then you had your incredible sell down, which took a little bit more than a year, a little bit greater than minus 50%, right over here in 1972, 73, into 1974. Come on out into, again, 1980, Ronald Reagan beats Jimmy Carter. Market having come back up to where Nixon had gotten reelected, bought up all the Watergate. You had a little bit of volatility here in October, dipping down into the election. Very fractional, very small. And then the market peaking here going into Thanksgiving. And in Reagan's very first year, he took on a minus 28% drop in the markets. Come on out into when Reagan beat Mondale in 1984, and you had virtually nothing. You were dead flat for the better course of 4 months until the new year began. Literally trading in a 8-point range on the SPX. 168 down here to around 160. No volatility whatsoever. So again, cruising on out, and again, moving on out from the Reagan beating Mondale into the 87 Black Monday crash, kabam. The next year in 1984, well, this is wrong. This is 87, so I have this date wrong. This was 88. This should be 88, not 84. Ah, that was because I was doing copy and paste. See, I get things wrong quite often. Bush Sr. beats Dukakis over here in 88. And this is what is the kind of anomaly for me, is you're looking here at not necessarily green weekly counts, not that much, but the chart pattern itself. Peaking up here going into middle of October, a little bit of a sell down going in here into Thanksgiving, and then the rally heading into the early portion of 1989 through 1990 and never ever retreating back to it. So I just come over really quick over here to how our pattern is coming into, well, call it this year. Coming off of when Netanyahu was elected president of the world back in October 27 of last year, we've got a very similar pattern where we've had our rally, our dip, our rally, a higher high, a higher low, and here we are now progressing into where we are. But while we're on here, what I'm counting and sharing is the green weekly candles, which again, these are just anomalies that you pick up and you see. 4 green weekly candles off of that dip here back into August, 6 heading into the July highs. 4 coming off of that low in April. 5 last year in the beginning of the very year. 9 coming off of when Netanyahu was elected president of the world back in October last year. 5, 5, 3, 3, 3, 4, 3, 3, 4. Again, just following on with what we have. This is not something that is illegal to put in a 6th green trading week. It's not illegal whatsoever. But it's just something that you pay attention and you notice. So anyway, coming back here onto the elections, Bush Sr. beating Dukakis. Here in 92, when Clinton beat Bush Sr., you top out here in August. You sell off here into the early part of October. That was when you have your dip. You come out into when Clinton beat Bob Dole. You peak here in June and sell off into July, coming back up to where you were in September and never looking back because the internet had been created at that time. And you come over into 2000 when Bush beat Gore and again, peaking there in August, never ever looking back after that with your 50.5% sell down over here on the SPX with the NASDAQ selling down 82% in that same period. W beats carry. Boom, boom. Right here, peaking over here in June, selling off into the early part of August. Coming back to where it kind of just came off right over here in the early part of April. You come out to Obama beating McCain, and everybody knows the story about Obama winning the election and then the market eating a big bag of dicks after that. The market took over where he had beat McCain. They did not break back above the dot-com highs, but they did come back and reclaim where Obama had become president back over here in 2011. Over here in 2012 for the re-election, September you peaked. Over here into November the 12th, election having occurred within that, your sell-off. And then you bring it into Trump. And although you don't see it on Trump with the top being here in August and the bottom being the week prior to the election, when Trump won, the market was down 5%, halted. And the morning after that, we weren't no more than 7 or 15 minutes after the opening bell, we were green. Trump beating Clinton in 2016. And you come out to your last one, your final one being here when 2020, when Biden beat Trump, where you peaked over in September, end of August, and you drop down into not only September, but then a double bottom into October. So with what we're going through right here from a seasonality election, seasonality September, seasonality everything that you can put together on it, and a big bar of soap in a prison shower, nothing whatsoever makes sense. Zero. Nothing makes sense. Add in the political tensions around the world, add in interest rates, add in inflation, add in immigration, add in everything you want. And it still does not make any sense. So, again, bringing you over here onto the SPX. And again, we are looking at a 6th green week, closing above that 58.29 on Friday. And there's very little in front of this to be able to block it off. So I come back onto the no way. There is no way they're going to do this. It doesn't fit. It does not fit. Well, they're doing it. Coming off of that August low, being the 4, we are looking at that wave 1 coming up here into the late part of August, the bounce. The drop into September, September 2, September 6, September 11th, down there at that 54.02 being the wave 2. And our wave 3 should be topping out somewhere up here in the 59.34, 60.39 area, with 59.08 being the trigger point for what should be the bigger, broader, wider view target. This coming back from 2022 lows. 59.08, 59.34, so we're looking literally at a possible 35 to 60 points to the upside. If they're going to be bullish and hold this bullish, then the lowest we should get down to is roughly here, right around this 56.70 area, possibly into that 57.30. The bears are going to need to break down below that 56.65, which we could not break down with the gaps that we have that are in between that 56.75 and 56.18. Until we are severely broken down below that, this is what is going to continue to be the primary view. And putting this into a little bit of context, we look here at the year to date, right? We look here at the year to date. Now, with the market being up on the year, I will refer back and make sure that I have it correct. With the market being up 25.4% on the year, 23.49% year to date to close, 34% year over year. One must question as to why would one sell off in tax year 2025 when one could just wait until tax year 2026 begins in January. So that's a CPA accounting view, and it's also a very big common sense view as to why would they? Well, there would need to be a catalyst, and as of right now, it's very questionable whether or not that catalyst will appear. So coming over here onto the ES and looking in very zoomed in at, we are looking at a 5-day 15-minute, which we really don't even need to do. We can look at the week-to-date 5-minute coming off of the lows here on Sunday night at 58.50, having run up to 59.18, which is a massive 68-point range. We are starting to get a little bit of a rollover, and we are starting to come down to around that 2 o'clock dip, which you saw yesterday over there on the SPX. But you're still going to need to get down here, down around this 58.90 area, which would take you to that 58.40, I believe is what I posted in the room, for you to even consider that there will be any kind of a move going down into the end of last week. So again, looking here, zoomed in on the SPX, 58.45, that's the primary pivot to the downside. Without 58.45, there's absolutely no reason whatsoever discussing downside at all. Your gap over the weekend being that 58.30, 58.15. And now, as of current, your minus 1% from the all-time highs would be just slightly after filling the weekend gap at 58.15. The trouble zone over here still sticks to 5,800, 57.95, and with the 5-day moving average down there as of yesterday, there is absolutely nothing to start jumping up and down and squirting salsa all over the walls on Taco Tuesday, because minus 1% from yesterday's close would bring you down right around 5,800. And you all know after a minus 1% day, you have a strong probability that you are going to get a plus 1% day the next session. So bring you over onto DIA. I have not updated the chart, but I'm keeping it in a wider view to see that post FOMC gap, this ramp that we have been on for, call it a week now, since last week when we couldn't break 418. This 431.76 is what I have as my drawing for a very high probability topping pattern for this final wave of DIA. If it works, we won't know until it is shown that it works. I won't know that that works until we are down below 415. Come over onto the QQQ, and the QQQ has filled all of its upside gaps. They're all filled. Every one of them is filled. They're all filled, completely filled. Remove the 50-day moving average, and what you have here is looking back to the very start of October, where we couldn't get down below 477 with anything. Gap, 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 and 487. Right now, you're dealing with 493. You're dealing with the weekend gap over here at 493. 487 is when you can start to pay attention. Until you've gotten a breakdown below 487, it really is a waste of energy and waste of time to be going over and looking at it. 221.41, the target that we had here on Friday on the IWM. Busted out through it. And here you are at, yeah, look at this. Look, we're going to do it. We're going to do it. We're going streaking. We're going to the We're going to the quad. Your 2022 open, 223.71, 224, 225, that impossible break zone up here on the IWM does not mean that you're going to get a sell down here into minus 220. But it does mean that you are getting to a very significant topping part where you are going to at least need a break. Come over here onto your VIX, and your VIX having finally started going into that gap, slowly going into that gap, but it ain't filling that gap. And it's still hanging here around this 20 with VIXpiration being tomorrow. So a lot of things that are in, grinding gears, as you might say, but we're not getting any speed or velocity into any direction at the moment. And you bring it all back over here onto NVIDIA, which NVIDIA, we can go and move this because I did not update this for the new gap that needs to be filled to the downside. And here's your NVIDIA. As I was sharing, that 131 is the rejection spot. Didn't reject it, now supporting it. Well, 131, the rejection spot is now the support spot. So as long as NVIDIA is holding above 131, there is absolutely nothing whatsoever to be considering for any kind of aggressive downside movement on the QQQ. Come over onto Tesla. Tesla being that move down off of that 264.86 right on down here into filling gaps, and 207.50 is still your bottom, and you have earnings coming out in a week. So I still see nothing fantastic with Tesla. And then you come over here onto JPM, and JPM talking about that 221.50 area. You had a nice little dip early in the morning. Nice little dip. If you flipped those 215 puts, you did good. But now you're right back to where you started at the beginning of the day yesterday with JP Morgan holding at 221.50. And you have the Citigroup, Goldman Sachs, and Bank of America. Bank of America being the company that is rumored to have the liquidity crisis. Warren Buffett selling off on his position, but still nothing going. So the SPX, the algo, and the sit back and wait, I leave you with the only thing that I can, which is the algorithm and the music that it plays when it does those.
Every time I come a nigga gotta set it, then I gotta go, and then I gotta get it, then I gotta blow, and then I gotta shut it. Any little thing a nigga think that he be doing, cause it doesn't matter, cause I'm gonna da 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 da